All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hold on really quick. Okay. I'm just going to grab some of my coffee really fast. How's everybody doing? Man, this is going to be one of those days again today. Hey, Alex, how are you? I say one of those days. It's going to be a busy day. Today's a busy day. It's going to be a busy day in the markets. And then on top of that, I'm interviewing a lot of people today to bring you guys some insights. If you guys are in the chat room, you just got the Chris Weston interview. That Chris Weston interview is now posted. It's getting posted on Trader Summit right now. I gave everybody in the chat room a link to the video. But that will be out very shortly. If you're not in the chat room, you'll get it. You'll see it just in a little bit. Good interview. I think you guys should all watch it. We just had the South African Reserve Bank just actually they just met. Excuse me. They basically said, persistent inflation, slower growth estimates going into 2022. You can see it right here. Mike, how you doing? Alex, good to see you. This is South African headline CPI. You can see 4.2%, previous 4.2%, and then you look at core CPI, same 3.8 versus 3.7. So high inflation, right? GDP growth seen at 5.3%, 2022, 1.7% versus 2.3 previous. So first quarter growth, 2021 growth is better. As you know, we're in 2021, so it's great. But 2022 growth is going to slow, but inflation is persistently high. So that is, that's. I know Ryan's talked a lot about it, but that's really. Stagflation numbers, right? And that's not good. It's not good. It's not good. It's one thing to think, okay, well, here in the US, of course, we have high inflation because all the fiscal stimulus that we've had and, the supply disruptions, blah, 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 blah. Yeah, we're going to see some slower growth. Everybody's already starting to come to grips with the idea that we're going to be dealing with stagflationary type of pressures, but not everywhere else. So if this becomes more of a global phenomenon, that's when, things are kind of, anyway, I'm long some US dollar, South African rand. I bought some this morning, right around these prices, little false breakdown I was looking at. I'm looking at a 38% retracement that held before I got up this morning. So it held in Europe. That move, I was surprised actually we went through there. Oops, let me move this bias chart over. Sorry, guys. That happened, like I said, in Europe. I didn't expect in North America we were going to come back down here. So I picked it up, I guess an hour, 2 hours ago. So right around here. I like it as long as we continue to hold up here. And what I think is happening. And by the way, I played, this is my winner chicken dinner trade of yesterday. It was a big one. Because following the FOMC, I went long this at 1469. And sold it at 84. It was a really, really good trade. I think it was more because of my position sizing, but that's also percentage wise. That was a pretty good trade. Anyway, I did a couple other trades yesterday too. If you guys aren't in the chat room, I sold the Aussie at 90. And then I covered it at like 64 or something like that. So, but we're right back up there again. I'm actually surprised the Aussie is where we're at currently. I'm very, very surprised. One of the other things I wanted to point out really fast, and actually we can probably stop here in the Aussie. Let me just write down the numbers while we're here. High to low. Yeah, let's get rid of this for a second. Or you know what? Let me make this different. Okay, so 73.20 horizontal resistance as well as 38% retracement. So 43.20. Why did I say that? 73.20. All right, support. You know, the sad thing is I thought we were gonna be able to change these biases, and unfortunately, we are not. On some things, we will. Okay. Support 72.20. Trend line support 72.50 by the time we get there. Just letting you know. Okay. I want to point out gold really fast. Gold just, if you didn't see the update that I just sent out, gold just flushed through support hard. Like if I'm not long gold, but if I was long gold, I'd be like, holy crap. So Michael just said precious metals are lower while dollar is also lower. Everyone going into equities. You know, I don't know I honestly don't know what's happening with gold. I'll say it again, that I think gold is being shunned as an asset class over cryptos, but I don't understand why it's so weak right now, like at this moment. Like I don't. Craig says alt bat and gold. I mean, I guess I'm not going to look for a technical setup because I have to reference it every day that it's trading like crap. So I'm not even going to think about looking for longs because it's trading heavy. It doesn't matter when or where, you know, it doesn't matter. It doesn't matter what's happening. It's just heavy. So I'm just, I'm like staying away from it. But the thing, I guess we got to point out a couple of things actually regarding gold. This is going to be pretty significant support because this is a 618 retracement. If we go out and take out this 1735, I know we've written it a lot, but if we take out that 1735, I mean, I have to go instantly bearish. You know, you guys know I've been, you know, bearish for a while. Like, even though the bias chart is flipped from bearish to range, depending on what's happening, you know, over the course of the last couple of days, I just haven't felt right about gold. And while it's below 1835, I think you have to be really careful about being long, because remember, this is the, if you don't recall this, here's the high, right? High to low, 618 retracement, horizontal resistance. I mean, a month ago, I thought that level would give way, and it just, I mean, we might still be developing an inverted head and shoulder pattern, but to be perfectly frank here, I think we're developing more of a longer term bearish wedge, which is scary in itself. Actually, let's do this. It's looking something more like this longer term, or, you know, could be this. Something like that, which is a, you know, and then this is your wedge, right? So right there's your wedge bottom. I think that's what's happening again. And if you got to think about that, if you're bearish the dollar, that's not going to help your argument, right? So anyway, let's go through the chart. So here's the euro. So the euro, remember, there's a huge options expiration today. huge at 117. After we get past that, if you weren't in the chat room, I told some people this yesterday late in the day. It was very late in the day. I got a text after the market closed. One of the bigger traders over at Stelios, he's like, "Hey Blake, I text with those guys or email with them all the time regarding, setups. Even though I don't trade for Stelios anymore, I'm still friends with all those guys, left on good terms. It was, just more of a mutual agreement. But I talk to those guys all the time regarding, if they ever need like a second opinion on something, they always email me, that type of thing. And I got a text as I was going to pick up my kids, from one of the traders there. And he's like, "Hey man, I'm pretty bearish the euro fundamentally, but I'm and he goes, I saw, your analysis on the euro. Where do you think the euro is going?" And I said, frankly, I think it's going to 116. I think we're going to retest these lows, which is also, 161% extension of this move, this last move up. And I'm like, but, I'm kind of worried about this big options expiration. He goes, "Yeah, I was thinking the exact same thing. I don't want to sell it yet, but, once we get past tomorrow's, this is yesterday's conversation. Once we get past tomorrow's options expiration, that's being here this morning, he's looking to sell, to be short, long dollars, sell some euros." So, obviously I don't Zoom call with him every day anymore like I used to, but I would be watching the euro, and I think you gotta stay very defensive while we're below that spike low here, which is going to be this trend line, which will be 17 at this. I know we wrote down yesterday like 1750. I think you can give it all the way up to 117.60. Okay. I'm going to keep it at range, but you guys know that that was 116.90. I think we wrote that down yesterday, if I'm not mistaken. Let's see what 116.95 and 116.65. Shoot, I'm gonna have to write down those same numbers. I mean, no, we went to 116.83, but I'm going to skip that. I'm just going to write down 116.65 because that's ultimately that's key, right? Just be really careful with the euro. I don't have much of an opinion here about what I want to do with the euro at the moment, but just be careful with it. I have no position. So big bounce following the Bank of England. 38% retracement is capping. So that should be intraday resistance, 137.25. You got the update right here, right? Oop. Let's imagine we go beyond that. If we go beyond that, there's another, the 50% retracement also coincides with the spike low here. So we might get to 137.60, possibly. But I'm going to keep a really close eye on the sterling because I do believe that if the euro gets a solid breakdown, the sterling is going to follow suit. It's just a matter of time, right? So oh God, is that gold's hitting new lows? Yeah. Anyway, obviously big support here, 136. Then you have 136.60, some, or 135.60. Well, yeah, 136. I mean, that's what we need to worry about for today. I can't see us. Well, you know what? Those could be my famous last words, so I'm not even going to say it. I was going to say, I don't see us breaking 136 today. Of course, that would be the day that it goes flying through 135, but I really, that's 115 pips away from right now. So I'll write this down just in case, but I doubt it. Kiwi. So we broke that resistance. That was the resistance zone we were looking at yesterday, but just keep in mind that I mean, this is previous support acting as current resistance, horizontal resistance right there. That all comes in at 70.85. I mean, I'm this is not, these are not going to be really solid levels, I don't think, but I mean, I'm going to write down 71 cents and then because if this trend line is holding like that, then that's taking us to 71.25. So I'm going to go right down 71 cents, 71.25. And again, I don't think they're great resistance levels. They're just, kind of speed bumps. Support 69.90. Okay. Dollar Canadian. Oh, man, my eyes are watering. Okay, I'm back. So I'm surprised actually the dollar Canadian's as weak as it is right now. We broke through that trend line support. I don't think that's really relevant at this moment. So 126 trend line support comes in below that at 125.70. I'll tell you, the dollar Canadian's some hell of volatility going on. I mean, this thing's whipping around like hundreds of pips at a time. So 125.80, I'm going to write down. And then resistance, I guess. I was looking at this yesterday. It was something that looked like that. It was like that. Triangle broke, snapped back, post FOMC. Then we rallied back to that breakdown point, and then just, I mean, that's a massive sell-off. I guess. I mean, if you're bearish, we shouldn't get back above 128. I mean, we just shouldn't. So again, it's really whippy, guys. So I thought we would break these ranges, but as you can see, stocks are up, and as long as stocks stay up, I guess FX is going to stay in range. So that sucks. Dollar Swiss, 92 cents, 93.30. Same as it ever was. Dollar yen, we're right up against resistance, right? 110.10, but let's zoom out a little bit and just recognize this. Here, let's get rid of that. It's not relevant. Get rid of this. We don't need that. We don't need that. I mean, we're at current resistance, like I wrote yesterday, 110.10 resistance I wrote yesterday. And obviously we're struggling there right now. So can we make it up to 110.45? I guess. But you know what I said yesterday about this? It's yours to trade, not mine, because I won't be trading it. All yours. Have a great time. Enjoy your journey with the dollar yen. Send me a postcard. Tell me how it goes. Norway. I was looking at this in the chat room. You know, following the Norges central bank, if we do break lows, I'm buying the dollar Norway because I'm going to play it as a megaphone, meaning that if we break 855, I'm buying it at 850, and I'm going to look for a move to 880, maybe even beyond that. That's how I'm playing it, just so you guys know. That's how I want to be. That's how I want to play it. So support today, 855, then 850. 850 is the 127% extension of this move. So I'm going to write down both those numbers. 850, 855, right? Resistance, 880. I mean, but I mean, all right. I think I wrote this down yesterday too. I think you just kind of leave it at that for now. But just so you guys know how I want to play it. That's how I want to play it. And by the way, crude oil is at new highs. I want to take a look at something because that's one thing that's, you know, I do think crude's about ready to hit near-term highs. I don't trade crude. If you guys know me at all, you know I'm the self-proclaimed worst crude trader on the face of the planet. Right? I'm not a good crude trader. I mean, yes, I've made some money trading crude, but I think I've lost money overall trading crude more so than, but I'm not bad at calling it. I'm just not good at trading it. Yeah. I don't know why, but whatever. Anyway, what I was thinking here with crude is we're going to make one more push towards the 78% retracement, but notice how this relative strength is divergent. So, that's, I think we're going to make a move to 74 cents and then, or 74 cents, $74, and then, you know, hit all this resistance up here and roll over. The reason why I'm saying all that is because I think that's going to influence US dollar Norwegian krona just slightly lower towards that 855 level, then go on. By the way, Dow is ripping right now. S&Ps are near their highs. Wow. Okay. Keep it. I'm almost done here. Stelios and Steve are like, shut up and just get finished. Dollar index. So bouncing around 93 to 93.50. The 88% retracement is holding. So yeah, great. I was so excited yesterday. I was so thinking that we're going to be moving out of these ranges. Dollar Mexican peso. I think this support's pretty key. That'll be at 1994 if we can make it there. I think we're developing this, triangle. Resistance will be 20, let's just call it 2010, and then 2010. What's making all this noise? Euro Aussie, not trading it. Okay. 2010, 2020. 22. That's massively key. Like I said, with gold, it's trading so heavy, you have to just be really careful with it. I'm actually about ready to flip that thing back over to bearish. Silver. While we're below 23, we should think that there's going to be a move. That's 23.10. And 22 is back on the table again. So 22. I'm about ready to flip that thing to bearish again too. Bitcoin, as annoying as that is, 40,000, 49,000. Actually, I would say this: if for some reason if you're playing it on the long side, if you can get back to like 47,000, that's probably a better place to be a seller. But I'm going to write down 49. Let's see if the S&P can get to 4450. That's what I think. Why not? Why not? 4450. Guys, if we make it up there, I think you got to sell risk. And I told you yesterday exactly what's going to happen. And this is going to happen. I put in this pattern in play in the S&P whenever I did last week, right? For safety reasons, for people that don't listen to the webinar, they use, ForexAnalytix patterns in play. Those, you guys are all listening in. I think you guys do it the right way. There are people that buy ForexAnalytix. They just play the patterns in play and that's it. Which, I don't think that's the right way to use ForexAnalytix, but it's their prerogative, not mine. So, when you get a pattern in play like this and I move the break even or the stops to, break even, I know what's going to happen. We're going to trigger that invalidation here very shortly. And once it invalidates it, it's going to roll over again. And I did it just, I guess, again, for safety reasons. So, all right, Steve Stelios. Good morning, guys. Oops. Oh, shoot. I forgot to write this down.
Good morning, Blake.
Yeah, I was waiting for you to finish the.
Yeah, sorry. Chart. I just, I'm going to do that right now. So support here. Well, I would say it's probably back here at 4380. And then obviously 4,300. So I think we're going to go right to D and then reverse. I think that's exactly what's happening this morning. Because this market is awesome sauce. That's why. I don't even know where support's at. Really, support is going to be 4,400, really, then 4,300. And I say that because we have these hourly. Oh no. I don't know. Support's going to be hard.
Blake, we just got US PMIs.
Oh, yeah.
60.5 versus 61.5 expected.
Oh, that's why stocks will stay elevated today.
And services PMIs lower as well, 54.4 versus 55.
Thank you. There's a spike low there of 43.86, which is really close to the previous 43.80. I was just going to say, so I'm going to say 43.85 and then 4,300 below that. So, which we shouldn't see today unless something crazy happens. So there you go. Bias chart's done. I'm finished. This work is silly. It's silly.
You're 50 years old. You're not finished yet.
I know. I'm finished with today's analysis. That's what I'm finished with. All right, guys. Yep, you're done. Have fun.
Thank you, Blake.
Thanks,
you.
guys. Good luck today. I'll see you
you.
all in the chat room.
Bye-bye.
Let me just post that on the chat room. Second, and done. Okay.
One and done. You
One and
remember
done. A bit like central banks.
that?
One, the market craps itself, and then you're done.
Yeah.
So interestingly, risk on again. So you know, I've been trying to make some sense out of yesterday's FOMC, and I think we can all agree the text, basically when they announced that you know, they're leaving rates and change, the accompanying text was not hawkish, but Jerome Powell was a little bit hawkish on the afterwards. What I don't understand is the following. They said they could be time to reduce purchases, and we're going to be looking at developments, blah blah blah. You know, I don't think realistically they can be tapering before December. So I think people are expecting, if and when taper begins, it's going to be on December. And then Powell says tapering will be done. You know, purchases will be completely done by middle of next year, so 6 months. But he also said that it's going to be a gradual process. So you tell me how we go from buying billions and billions and billions from that to zero in 6 months. Is that gradual? I mean, the markets are going to go berserk, I think. You know, a gradual process would be to take the purchases from whatever it is to zero in, you know, a year or two. But anyway, it's just, you know, I was reading it and reading it again. I was thinking, this is not gradual. I mean, what are they doing? What are they telling us?
Yeah,
and I'm not making any sense out of it.
Yeah, don't try to make any sense out of it, because it doesn't necessarily make sense. You know what I mean?
To me, it doesn't. Maybe other people are smarter than I am.
The vast majority of the things they say them to say them. You know what I mean? Because they want to create the impression that they're in control and all that.
Yeah.
Now, I've told you my opinion. In my opinion, there is a huge chance that they will never manage to finish tapering, the process of tapering.
Yeah.
Now, even if they do manage to finish the process of tapering, they will never manage to go through any rate hikes. If you saw, they actually announced like they're going to hike 3 times in 2023. You know, I'll take the under of that bet almost at any odds offered to me. Almost at any odds, literally.
Yeah, I know what you mean.
I mean, even if you tell me like 10%, you know, are you willing to bet 10%? I'm going to be, yes, you know, yeah, even if you offer me that bad odds, I will still bet that they're not going to be hiking 3 times in 2023. I think there's a huge chance that they will not be hiking at all.
Yeah, I don't disagree. But I think the markets are telling us today, with risk being bought like this and the dollar retreating a little bit, the markets is telling us that, you know what, what they told us in the accompanying text on the FOMC is probably what's the truth, which means that they're not that close to tapering. Or if they do taper, it's going to be really gradual, and it's going to be less than what's happening.
You know what's also like the funniest part, right? That, you know, you said that, you know, they're going to be very dovish, etc. It doesn't really matter, you know, what was said, but as it seems, that's what the market believed, that, you know, they remain extremely dovish. And how do we know that? As you very well said, by looking at the reaction of indices and the dollar. Now, the funny part is that the only thing that doesn't seem to...
Gold.
Yeah.
Of course, we know that metals are going to get hit more, and for some reason they are underperforming. So we've said this before. You have to be, even people like me who are very bullish metals in the medium term, you have to be very careful, you know, because there's a good chance we're going to get one more flush, and it could be a violent one.
Here is gold. Here is silver. Silver somewhat better performing today, but they both remain under pressure. So we might have gone back to risk on. So in essence, it's like the only market participants that seem to believe that there's going to be like, some serious tapering or whatever are people that are trading gold and silver. Now, how the hell is that possible? You go ahead and tell me.
Yes, something's got to give at some point.
Yeah. So other than that, there are a few developments that are worth noting today, technical developments, I mean, following yesterday's news. We've had big reactions higher to the vast majority of FX pairs against the dollar. One of the most prominent one being the cable, quite a spectacular rebound. I still think that we're in some kind of a corrective formation, and I'm still inclined to believe that things are moving higher against the dollar. Specifically, if we had to have a look at the DXY, I still think that this whole thing might be a triangle, and we might just, push lower from here. So I would be very, very, very skeptical in being long the dollar against the previous high. I think the risk reward is good in being short. I know that the evidence are not concrete yet. I do realize that. That's why I only have exposure against the NOK for the time being short the dollar. And specifically, since I mentioned the NOK is behaving very well. It got rejected from where I wanted to see it getting rejected. And it's now pushing back towards the previous low. And I think it's extremely likely that we're continuing lower from here. As you very well said, the Norwegian Central Bank is is probably the most logical one left on the planet. And that should give an advantage to the people that own the NOK, because the NOK should stay elevated, and I think it has a lot more to go. Now, technical developments we can find, around the board. The Aussie, for example, I was monitoring. I know that Blake was looking at the same channel. I was monitoring this descending channel for the Aussie. Nice reaction today in the Aussie, and we're threatening for a break higher. So perhaps we've already found a low in this pullback in the Aussie. Here's the Kiwi, which is pushing higher again. Keep in mind, we have a very nice, like triple confluence of resistances at 71.30. It's the 200 daily moving average. It's this channel that has defined the pullback. And it's also the 50% fib of this whole move lower. So all three of them at 71.30. We break through 71.30. And I think that Kiwi is on its way to new highs. Now, USD Cad has also, rolled over, strongly. As you see, we're getting very, very close to this channel trend line support. So not breaking down yet, but just a few pips away. Now, do I think that we can really forcefully push, because we've already gone 1% lower in the day, which for recent standards and FX volatility is, quite high. Do I think it's that it's likely we break through this channel and close below it today? Not that likely, right? But it might happen tomorrow or the day after. Now, what else? Yeah, USD yen. USD yen is also making an attempt to break higher once again. But keep in mind, right, we've made, just count the number of attempts we've had just the last couple of weeks, right? It's what, 6-7 times we've tried to break through this channel, and every single time we've failed to do so. And it's still early on the day, right? So keep that in mind. I mean, it's another attempt. That doesn't mean it's going to be a successful one, right? We're going to find out by the end of the day if that's going to be the case. So USD yen definitely one currently in my watch list. Now, you'll notice that crude oil is once again pushing higher. Don't forget, I said multiple times that it is very, very likely that that pullback in crude would be restricted in just back testing the broken channel, trend resistance as support, and for the time being, that seems to be the case. So absolutely no reason why you would want to be short crude. Now, in the case of natural gas, since it had a much more vertical move to the upside, the jury's still out. We might have already found the bottom here. You know, I wouldn't be jumping the gun yet, right? Being long, we might need to see a little bit of a, you know, bigger pullback. Now, you'll notice that 10-year yields, and this is of course the main reason why USD yen is higher on the day. US 10-year yields are, you know, trying to push higher. We've been in a congestion for quite some time. RSI is also a testament of that. Just look at how RSI has in essence been consolidating in a very, very tight range, just above the mid range of the index, right? So, you know, we might be calling for another move to the upside. Now, I just gave you an outlook with, you know, looking at a lot of markets showing some promise, you know, moving against the dollar. Now, the question is, what can, you know, derail that outlook? And the answer is very, very simple, right? If the market changes its mind about how it wants to interpret the Fed, and we see equities finding resistance anywhere between here and, like, let's say 44.55, horizontal resistance area, also the 61.8% fib from this move lower, and they roll over again, then that of course threatens this outlook and postpones it for whenever this corrective downside move is over, right? So in order for me to be overly enthusiastic about the outlook I just gave you, which I do, you know, have in the back of my mind, and I do think it's, you know, rather likely, I want to see equities punching through this resistance area. And, you know, for me, the benchmark is always the S&P, right? And breaking through this blue channel, because as long as we stay below, between, you know, these two lines and within this channel, then there is a chance that this whole rebound is corrective in nature, right? And we might see more weakness. Now, we break through it. I think the odds that we've already found a low in this corrective move increase substantially. And then the outlook for the rest of the markets we just looked at, you know, becomes more obvious, in my opinion. Now, I'm going to be boring, but I'm going to reiterate once again that if that's the case, having to do with, let's say that we found a low in equities, and I just gave you the pivot area that will probably tell us if that's the case or not, you should expect that Euro Aussie, Euro Kiwi, look at Euro Kiwi. Euro Kiwi actually had already broken down from the channel, back tested it several times, and is threatening with pushing lower once again. You'll notice that the same applies for Pound Aussie and Pound Kiwi, meaning here is Pound Aussie. Pound Kiwi, of course, looks a lot more bearish. Here it is. Seems to be breaking through a bear flag as we speak. So we go back to risk on mode. And then you should expect these to push lower, right? So it's another way you can express, you know, risk on sentiment via trading FX. USCB leading index just came out, by the way, 0.9 versus 0.7 expected. And a previous revised lower to 0.8 from 0.9. Nothing to write home about, nothing that's actually going to move the markets, just saying. I think I also wanted to mention something about platinum. Do I remember right? Yes, platinum. Platinum had a fantastic recovery the last couple of days, but look where it has stalled for now, right? So stalling again at this descending channel trend line resistance. So basically, you want to be short. This is a perfect area. Risk reward is extremely appealing to be short here, but be careful because we break through this and we break through like 1043 previous highs, and then we're headed much higher. So you can be short here against, let's say, 1043, right? So that is a nice risk reward trade. And in this case, you can have a target of, let's say, 860. But we break through 1043, you don't want to be short anymore. Trust me on that. Okay, I think that's it more or less. So let me have a look at what you're looking at. Central bank definition of mid-2022 is 9 months, December, January, February, March, April, May, June, July, August. That is 9 months at 15 billions per month. I'm assuming Simon is talking about the pace of tapering, the potential pace of tapering. Yeah, let's see. Count me a skepticist, right? So fairly weak USD all around. Listen, there is no concrete evidence yet that the dollar has found a high. I want to be very, very clear. But I think that we get a nod from equities that they have indeed found the bottom, which we're going to know rather soon. And then, yes, I do think that the dollar is going to be very, very, very hard to avoid depreciation. I think it's likely that we've already built the right shoulder of this head and shoulder formation. We've found a high, in the shoulder, and we break through this trend line support the neckline. And I think we're headed much lower in the dollar. We're headed towards 90 to begin with, and we break through 90, then all hell can break loose. But one step at a time. It's nice to have a plan, but for any plan there always has to be a trigger, and the trigger for me is going to be equities proving to me that they've already bottomed out. They've been doing a great job so far. Look at this. Before, when we were looking at it, they were lower. They've now actually almost reached this confluence of resistances at 44.55. We close on a daily close above this. For me, it's all I want to see, and I'm going to start looking for even higher prices in equities and lower prices in the dollar. And as you know which currency pairs I'm mostly bullish against the dollar. I'm already short one of them, long one of them against the dollar, or short in this case because it's USD NOK. And I'll have no problem getting more exposure in other markets as well, being short the dollar. That's what I've been waiting for all this time anyhow, because my medium to long-term bias is definitely being bearish the dollar, in my opinion, for very solid and valid reasons. And I'm just looking for the perfect timing to express that, via positioning. Anything else, guys, girls? Netflix. Oh, this is a 4-hour chart. That's why I have no drawings. This makes sense. But since I opened it here by mistake, I think this is what's happening with Netflix on the short-term chart, right? Pennant, nice move higher, pennant, break higher. Targeting 680. There you go. And having a look on the daily chart as well to get a bigger picture. There is your pennant. There you go. Nothing I can see on this chart that would make me have bearish feelings about it. ARC. The jury's still out here. I don't know. I don't know because I see many corrective moves, right? Look at this. I've indicated all of them. Now, the bullish case scenario here, right? Since we're talking about potential continuation of the risk on let me show you. There is your bullish case scenario. Right, that's the bullish case scenario. So where would you become more aggressive? Above this trend line. Keep in mind, though, that there is an alternative interpretation, right? We had one sharp move lower. This whole thing might be some kind of correction consolidation, and we might need another move lower, right? So keep that in mind. That's why I said the jury is still out, because I can easily make the case, technical case, for both scenarios. That's why it's important to have pivot areas, right? 113, important support, 134, important resistance. I wouldn't be doing anything with it between these two levels. That's what I think. IWO. Yeah, nothing yet, right? You can see why. I think it's eventually going to break higher. For me, it's a very, very clear contrast. Impulsive move higher, correction. Keep in mind, though, the correction can last longer, but eventually probably breaking higher. I don't think this is some kind of a distribution pattern. I think this is a consolidation pattern that's going to lead to higher prices. Now we have a question about copper. The same applies to copper, right? Impulsive move higher, corrective move lower. I think copper eventually is breaking higher, probably sooner rather than later, but still within this corrective pattern. So, not much to do as we speak. ARCO. What's this? You probably asked for it at some point in the past, and it was probably over there, because that's the only thing we've drawn here. And I can't remember it, but I obviously, from seeing this drawing, I predicted that this is going to break higher, which it did. But look at how choppy price action has been, right? Now, most likely this is a correction, though. Most likely this is some kind of a correction. But I have to tell you, I'm not at all enthusiastic with the general picture of how price has been developing here. Bottom line, I would trade something else. ARCO was a SPAC. Okay. NVIDIA. NVIDIA is doing everything right. Look where it found support at the previous high, right? Quite astonishing. I would easily expect it to finally, produce a little bit of a deeper corrective move. But that might be it, right? That might be it. That might be it. With this type of markets, team. Yeah, this one just, yeah, just no words for this thing. Yeah, I wouldn't be long here no matter what. I think at some point this one is going to have a parabolic move lower, as it has had a parabolic move higher. So, in all honesty, don't try to chase this. This is going to be, yeah. I think we're closer to the end of this mad move than anything else. REGN. Yeah, we obviously predicted some kind of a pullback. It took a few more days to manifest. The pullback has been very corrective in nature so far. Now, is it necessarily done? No, it isn't necessarily done, right? We might get something like that, but I don't see anything wrong with it. You know what I mean? I don't see anything really bearish. I mean, this looks to me like another corrective pullback. Might take us a little bit lower towards this area and then higher. Might not even make it that low. I mean, with these markets, you can never be, you have to be very conservative with downside targets. It is what it is, like it or not, it is what it is. SCDG doing nothing wrong yet, with the keyword being yet. You remember the discussion we had about this potentially also possibly being part of some bigger, more complex corrective move, and I think it's still a very likely scenario, right? So I wouldn't be trading this. Let me be very clear. Yes, you can be long against this trend line support here, right? You can be long against the recent lows, but I'm not at all convinced that we found a low. I don't like the way this rebound has been unfolding. It completely lacks impulsive characteristics, and it makes me believe that we're still in some kind of a bigger corrective pattern that hasn't still revealed itself. And now you want to see a self-propelled gun, an SPG. Let me see. What do these guys sell? Simon Property Group. Oh, Simon. I didn't know that you had a company and listed in wherever it is. Let's see. Yeah. I'm not really sure. I'm not really sure. I'm still not convinced about this move higher. I need to see a lot more. Now, if we focus a little bit in the shorter term, I guess we can look at this. Yeah, these are your levels to watch. So above 137, bullish. But look at the RSI. Look at the divergences that have started developing since we were there. I don't know. I would look for something else to belong. This thing is not convincing me. Sorry. Okay, guys and girls. So I wish you all a wonderful rest of the day, and I'll talk to you again tomorrow.
Thank you, Steve.
Bye-bye.
Bye-bye, everybody.